Welcome back to CryptosRUs. I am George. We're all George. So today, unusual time for me, but I think this is an important question that needs to be answered. Should you be profit taking? Should you take some off the table? I get asked that almost every stream. So let's talk about it. All Bitcoin holders and all altcoin holders needs to pay attention. So thanks for tuning in. As always, smash the like, subscribe to the channel. 2 streams almost every day, 11:30 and 8:30 p.m. Central Standard Time. Obviously, this is one of those unusual times. That's because I will be traveling. But make sure you hit that notification bell and also follow me on Twitter so you can be informed of what's going on. And follow me on Facebook, Instagram, and check out all the latest news and articles and guides on CryptosRUs.com. Welcome, guys. Welcome. Not my usual streaming time. And I'm going to make this real quick. Okay, I'm going to make this real quick, but this is something that a lot of people have been asking me about, newbies and veterans alike. There's a lot of people that still remember 2017, getting antsy, wondering what is going on, right? Should I be taking a little bit off the top? Am I being too greedy right now? That's what I'm here to answer. All right, so looking at Bitcoin, it's 46.4, so it fell down a little bit from this morning, but overall you can see it's hugging this line. And something like Solana, still doing very well, came down from its 200 peak. So things have cooled off slightly from this morning, but that's not a reason why I'm talking about profit taking. I think a lot of you guys know that a lot of altcoins have been running up like crazy, and you can include Bitcoin in there. I mean, Bitcoin is year-to-year performance, 352%, But just look at everything else. Ethereum up 873%, Cardano up 2,570%, Solana 5,600%, including almost 400% just this past month alone. And you go down the list, they're not the only ones. Take a look. Terra went up 9,000% for the last year. 9,000. And you go down the list, and there's many other altcoins like that, including many that have gone up 200, 300, 400% within the last 30 days, right? So should you take some off the top? Should you take some profits, right? Is this a remnants of 2017, 2018 when a top is near, right? Well, let's try to answer. First and foremost, what is profit taking? As silly as that sounds, some of you guys may not be aware of what profit taking is, because what you do is just go all in. You put all your money in, you ride it forever, and you never take any off the top until you decide to just sell it completely. No, that's not what profit taking is all about. Profit taking could be selling off everything, but then you got to worry about taxes and capital gains taxes, but that's okay. But profit taking could also include just taking a small amount out, okay? It does not mean you have to sell in the whole thing. If you've been holding on to Bitcoin for years, or Ethereum for years, or Solana for 6 months, right? Does not mean you have to just sell it all off just to take profits. No, it just means that you're in the green. You bought it for $10, now it's $20, or you bought it for $10, now it's $1,000. You want to lock in some of those gains. Okay, that's what profit taking is. And it's okay to take a little bit off the table. You could take a little bit, a quarter, a third, a half, right? So remember that profit taking does not mean that you're selling it all. When someone says, hey, it's time to take profit take, it does not mean you should just sell it all, right? It just means that you're just being a little bit less greedy. You're putting a little bit less on the table, and you're taking out and locking in some gains. But why should you do that? Well, playing with house money is the safest thing you could do. And you may not be aware of this concept. But first of all, the most important rule of investing, if you are buying crypto, the most important rule is never to invest more than we can afford to lose. Meaning that you're not taking out a credit card debt to invest. You're not taking out a home mortgage or equity loan to invest. You're not taking your day-to-day paycheck and investing. Because if you do lose out on your investment, then you're really screwed. Then you're incurring very, very high credit card fees. You're not able to pay your mortgage and you're going to get foreclosed or kicked out of your place, right? You don't want to do that. So first and foremost, you're investing with extra money that you have on the side. You're not investing money that you can't afford to lose. Okay, that's number one. Number two, of course, I just mentioned is house money. And what does that mean? Well, if you invest and you're up 100%, well, that means you could take out your original investment and you ride the rest. And when you're riding the rest, that's called house money. That's called money that even if it goes to zero, it's not going to hurt you because you already took out your original investment. So rule number one, the most important rule after the fact that you should not invest more than what you could afford to lose after that, is to take out your original investment. And for most of you guys, this should be very simple. When something doubles, like Solana has, went up 5x within a month, it's very easy for you to do. You put in $1,000 into Solana, now it's worth $5,000 or $2,000, let's say when it doubles, you take out your original 1,000 and you can let the rest ride, okay? And that's playing with house money because you already took out your original investment. So even if Solana, in this case, goes to zero, you're not going to be hurt by it. You already took your money back, right? So that is, I think, the first step everyone should strive for if you're profit taking, okay? Now, what about this house money? What about the remaining amount that you are riding, right? Should you just let it ride forever to the moon or to the ground, I should say, either way? That's where the strategy is different for everyone. You could look up investment strategies, profit-taking strategies. You could look up and find thousands and thousands of opinions on how to take profits. There are certain people that break it up by a certain percent, certain people that look at charts and TA and tells you this is where to take profits, right? So there's no right or wrong when it comes to setting a schedule for yourself when it comes to profit taking. If you took out the original investment, you can't be hurt by it. So the only thing you would lose is potential gains. But with that house money, with the potential gains, what do? Well, you could start taking some off the top at a certain interval. And that's the easiest way to do it. If something is going up 100% every single week, well, maybe you set a schedule for yourself. Every 100% it goes, I take out 25%. Or every 100% it goes, I take out 10%. Just a little bit off the top as it's going up, right? And that way, you have cash on the side. In this case, it could be a stable coin, USDC, or physical cash on the side, so that your favorite crypto, if it does come down or the market corrects overall, well, you're in a really good position to buy in and buy the dip and buy cheap coins. You hear that all the time. You hear me talk about buy the dip. And so many of you guys say, well, I'm out of money. I can't. I'm all in, right? This is the problem because you haven't set a schedule or developed a strategy for yourself to take profits, right? So this I'll leave up to you guys. And I've shared with you guys what my plan is. Once Bitcoin breaks above 64,000, forms a new high, heads to 70,000, I plan on taking 10% off the top of everything I have at 70,000. Okay, remember, it's 10%. It's not like 50% or 100%. 10%. And then once Bitcoin hits to 80,000, I'm going to take off another 10%. 90,000, another 10%. 100,000, another 10%, right? Remember, it's 10%, and every 10% is actually a smaller portion, right? But obviously, the dollar amount goes up because the entire market cap and all the coins values have gone up. So, that's what I plan on doing. But that doesn't mean that you have to follow that strategy, right? You don't have to wait for that 10,000 rise for Bitcoin. Maybe you don't equate it to Bitcoin at all. Maybe you equate it to Solana. Maybe every 100 that Solana goes up on its journey to 1,000, every 100 you take out 10%, or you take out 5%, or you even be more conservative and take out maybe 25%, right? So finding that strategy, right, is important, but you have to stick with it because the hardest thing to do in any kind of investing, especially with crypto, is selling on the way up. I'll tell you, that is the hardest thing to do. That is harder than buying the dips. Guaranteed. Guaranteed. The reason being, everyone's greedy. Everyone thinks that what they have will go up to the moon and infinitely and will never come down. I mean, just admit it to yourself, right? When you have something and it's a winner and it keeps going up, you want to just ride that. You want to ride that gravy train. No one ever wants to take some profits off the top. So that is actually the hardest thing to do, to discipline yourself to actually set a schedule to take profits on the way up. But everything that goes up comes down eventually. There will be some kind of correction, some kind of dip, right? And if you're able to catch those, that's how you can profit even more. That's why profit taking is important. That's why you want to lock in some of those gains so that you could take advantage. So here's an interesting article, and I heard a lot of people talk about this, that the best market days, okay, in this case it's stocks, but it's the same with crypto. If you miss out on the best days, your profit goes down significantly. Okay, so according to this, for example, if you're fully invested in S&P 500 since January 3, 2000, this was 21 years ago, okay? If you were fully invested, you never took profits, you're up 6%, okay? But if you missed the 10 best trading days, that profit goes from 6% down to 2.44%. If you miss the best 20 days, it goes down to 0.08. And if you miss the best 30 days of the last 20 years, you would actually be down, okay? Now, what is the point of me showing this? Well, even though profit taking is important, okay, but it's also important to have some always invested, especially into something I believe is the future, crypto. And in this case, this example is S&P 500, but yeah, if you're just holding, right, it's great. You actually made the most. But if you are taking profits, make sure you have some on the side so that you can take advantage. So on these, in this scenario, right, where it says miss the 10 best days, this doesn't calculate, right, the days before, the days before these best days, the corrections that happen before these tremendous jumps, right? So that's where if you can actually put money in and take advantage of those dips, you'll be way above the 6%. You'll be way above 6%. But this also shows you why when you take profit, you don't want to miss out. You don't want to take too much off the top or sell completely, because if you happen to miss some of the best days, let's say within a certain run, a bull run, you're going to cost yourself a ton. You're going to cost yourself a ton of profits, right? So there you go. I threw a lot at you guys. But if you're one of those people and you're like, hey, you know what? I know Bitcoin and Ethereum and Solana and Cardano and VeChain is going to be here for the future. I'm not going to sell any, okay? I don't need the money. I listened to you, George. I invested in money that is extra to me anyways. And I have plenty on the side so I could take advantage of the dip. Or I don't care about the dips. I'm just going to keep DCAing and holding. Well, that also works. You know who else did that? Well, Warren Buffett. Even though he's not a fan of Bitcoin, take a look at this. I mean, this is staggering, okay? Warren Buffett is not a trader. He's a fundamental buyer. He buys out companies, but he didn't always start out companies. But you look at it, even though Warren Buffett is getting pretty old now, worth about $90 billion, but you could see how most of the wealth came within the last 20, 30 years of his life. And when he was a teenager, 20s and 30s and 40s, even though he was rich, he already had tens of millions of dollars, but that didn't really ramp up until the later decades of his career. And that's through buying and holding really, really good companies that had tremendous uprise, right? Upside. That's how he made his most. And I believe this is the same thing with Bitcoin and a lot of the cryptos that we see today. A lot of the Bitcoin holders that bought in very early, yeah, they're already like this, okay? But a lot of people that got in later, including myself, a lot of you guys, and even people that got in this year, I do believe they're going to see something like this too. And it just comes down to patience and holding. really, really it, right? And to prove it further, I brought this website, Cost AVG. This will show you how much you would make if you DCA. And this plays into the portfolio, the sample portfolio I've been showing you guys, right? I built it with you guys 2 months ago, and it's already up 100%. 100% within 2 months. Think about what else there is that you can invest will go up 100% in 2 months. But anyways, I went back to December 1st of 2017, right? So not 4 years yet, but this is right toward the peak of 2017 and now coming down, right? And then going up and down, coming down, and it went up and down a couple times. Till today, if you put in $100 per week, you would have invested $19,700. $19,700, and now it's at $103,000. Your average, your ROI is 426%. Okay, that's simply putting $100 in every week, and it doesn't have to be $100. It could be $50. It could be $20 every week. DCA. You ignore the volatility up and down, right? So you could be one of these guys too. You could be a holder. You could just DCA and hold and hold and hold, and you may end up being the next Warren Buffett, right? But for those of you guys that want to optimize, right, you want to be able to maybe even grow faster than this. Well, then you have to employ a dollar cost, or I should say a profit-taking strategy, or stick to a schedule so that you could take some off the top, and then you have cash on the side. So when things come down, you could take advantage even more by buying those dips, right? So that's really it. I mean, there's really not much else to it. Rule number one is never invest more than what you could afford to lose. That is the most important. Never leverage, never borrow, like a credit card debt, mortgage, or stuff like that. I argue don't even borrow against your crypto. A lot of people are doing that. I get it. If you want to avoid capital gains taxes, you want to borrow your crypto. I get it, but most people are not doing it for that reason. Most people borrow against the crypto because they want to leverage. They want to buy more crypto with it, and it gets dangerous. So I say don't invest more than what you can afford to lose. And then number two is take out your original investment. Take out your original investment so you're playing with house money. And three, find a strategy that works for you. Find some kind of strategy so that you could take some profit off the top, right? Whenever we have good movements or we continue this bull run, so that you have some money. So you have some money on the side to take advantage of the dips. And if you really don't want to do that, you're like, hey, screw it, I'm just going to hold on forever, right? And become the next Warren Buffett. Well, then make sure you stick to a strategy of DCA. And you DCA over a long haul. You can't lose with a strategy called DCA. You really can't, especially when it comes to Bitcoin and many other altcoins. Maybe not every altcoin, but for Bitcoin, time is on your side. There may be up and downs, but time is on your side, right? The longer you hold it, the more you go for profit. And that's because we know Bitcoin is scarce and there's just more demand than supply. It's really that simple. All right, that's pretty much it. That's all I want to get off my chest here. In terms of profit taking overall, things have come down a little bit from this morning, but not too bad. Hey, look who decided to wake up. Cardano. Cardano's up 5%. So they started to wake up. Hey, who else decided to wake up? Polkadot. Polkadot is up 11%. So these two guys were not up. Algorand was still up. A lot of these other projects started waking up. Crypto.com woke up. Near.com, even Shiba. I don't want to talk about Shiba, but some other altcoins started waking up. So I think this is important for those of you guys that you may be a veteran from 2017. You may be wondering, should I take some off the top just in case, right? Or you may be a newbie and you're like, I don't know anything about profit taking. Well, hopefully this video helps you. And again, I like to remind you guys, profit taking does not mean you just sell it all. Okay, no, it does not mean that at all. When you profit take, it could be as little as $5, or it could be like 10%, 20%, but it does not mean that you have to sell it all. Okay, that's pretty much it. I'll do a very, very, very quick Q&A, and then I'm gonna let you guys go just to make sure I didn't miss anything. Have you looked into ALF? It's been around for a while. It's starting to get traction. Decentralized cloud-based computing network. I have. But I need to do more research into them. So stay tuned for that. All right. Zenfin XDC, man, not too familiar with it. I know it's also promising blockchain, but haven't looked into it that much. I do need to do more research into them. Also, dips are good when your crooked USA exchanges are working on dip day. Yeah, aren't working on dip day. You're talking about. Yes. So, I mean, we know that recently all the exchanges went down simultaneously. Whether or not that was on purpose or not, right? That happens. So, I think it's another reason why we should embrace DEXs more than the Coinbases of the world, right? It's not there yet, but it's another reason why we should. Are you buying Nervos Network? Not right now. I'm waiting for Cardano to be done first. Then that bridge could be pretty big. With interoperability, bring other coins or standards to Cardano. Have you checked out Stratos as a Dash? No, I have not. Yeah. Sorry, guys. Super chat today was meant for profit taking, not to look at all these new unknown coins that I don't plan on looking at right now. Harmony One announced a 300 million ecosystem fund for dApps and DAOs. This is pretty good. Have you heard of Sophie the Android? Yes, they're making a fleet of nurses to help with the elderly and help them with diagnosis. Yeah, no, that's not gonna happen. Sophie, as advanced as she is nowhere close of being a human or a nurse. Okay, so James, you may be excited about Singularity.net, which is into AI data marketplace and is created by the guy who created Sophie the robot, but they're nowhere close, and that's why I don't like AI plays in the crypto sphere. Maybe one day, but not right now. No. I'll see, and maybe I'll change my mind when Tesla releases their Tesla bot next year. Maybe it'll be so awesome that maybe I'll change my mind, but right now, no, that's it. All right, guys, I'm gonna let you guys go. That's it for this video. It's more about profit taking. Just want to give you guys a refresher course, or maybe some of you guys are new, you haven't seen me talk about it, right? People feel like, hey, I only talk about things going to the moon, which I feel like they still will. I don't think anything's stopping this train at this point, but you know what? Just in case, right? Just in case, take some profits or set a schedule for yourself, right? So that you can have that cash on the side. And for me, I think about 20, 25, 30% of cash on the side. I think that's a good amount. I don't think you have to go too crazy like 50 or 80% or something like that. Unless we do really see it blow off top and it's really obvious, then maybe take a little bit more. But right now, I'd say 20, 25% is actually a good number, good percentage to have in cash on the side. How does short-term capital gains tax work? Won't you have to pay 35%? Yes. But that pales compared to how much you can gain if you have cash to buy a dip or buy a major correction. So there you go. Okay, there you go. All right, guys, I'm not going to be streaming tonight because I'm traveling, and I don't think I'm going to have a stream tomorrow, at least in the morning. I'll probably have it at night, but not tomorrow morning. But either case, follow me on Twitter to get the latest update, okay? And my Twitter handle is in the description of this video. Have a good one, guys. Take care.